Happy Friday, Pat. Welcome.
Hey, Rick, how you doing, buddy?
Oh, no complaints. I got
Here.
you're still messing around with the chart there. I'm going to jump right into the topic as quick as I can here, just for the viewers, because I know I put up the little teaser about investors leaving the market. So I'm going to jump right to that. And it's saying here that August 3rd to July affidavits in Maricopa County show a significant reduction in demand from investors. Of the 7,175 closed transactions, only 18.9% were marked as intended for renting to a third party. The same percentage in June was 22.1%. In unit counts, purchases to be used as rentals fell by 35% from 2,094 in June to 1,335 in July. That's pretty significant. And they say here this is the second wave of demand reduction. The first was caused by much higher interest rates, discouraging buyers for their own occupation. The buyers leaving in the second wave are likely affected by interest, or less likely affected by interest rates because they pay mostly cash. They're probably getting discouraged by the new direction the market has taken since April. So we're seeing some weakening activity with cash investors in the market, which is very welcome for a lot of folks. One can only guess where they're going or what their plans are, right? So
exactly. It's amazing. It is really, truly amazing how, obviously talking to Jackie and Ruby on, the other day, and talking to agents and just talking to mortgage people and just reading, you kind of get a sense reading, with social media, you can read a lot of posts, just you kind of get the sense of how the psychology is, get a sense of the game, because it's it's like a football game. You can look at the score. Hello there, Lewis. But you can look at the score, but you don't know, how is the game, you don't know the flow of the game. So that's where the information comes from.
Yeah. It's I'm going to share some numbers here and some commentary. Again, I got, this gets kind of small. So I said the listing success rates dropped from 91% in May 1st to under 73% in August 1st. And I'm going to show you the chart in a moment. This is a crucial statistic as it's in free fall. The long-term average stands at 67.5, and it looks as though it will drop below this percentage during August. If 1 out of 3 listings fail to sell, it creates an atmosphere of worry that's hard to escape. That's kind of ominous. We're nowhere near the dreadful 20.4% we experienced in January 2008, but the listing success rate's reliable and crucial indicator that's flashing red. We need to pay attention. All in all, there are few reasons to expect an improvement in market conditions just around the corner. A large drop in interest rates would almost certainly help, but it's not something that's widely expected at the moment. Hello, Jackie. So it's interesting whenever you look at statistics, January 2008 has the worst numbers in every category. That's when we had our lowest sales, our highest inventory, our worst listing success rate. And this is where we're at currently. You can see the free fall there down here to 74.1. And I guess the average they say is about 67. Listings under contract are very interesting. There's a lot of up and down there, but you can see that this all started at the middle or end of April, started coming down. And that number right there is what is driving the amount of listings that we have available, and it creates this gap. Because right now we have today, let's see, I wrote it down here somewhere, 18,337 listings, with 4,425 come on the past 7 days, but only 2,678 go under contract. That's this red line there that keeps going down. And this is the blue line showing that the number of listings coming on every week really isn't flying off the shelf. It's not jumping. It's this number, listings under contract, that are driving that uptick. And then there's monthly average sales price. Well, it has declined excuse me, it tends to have a seasonal decline, but I look down here and it's barely noticeable. You can see in other years, except the 2 years here that really don't count. So it's crazy, but that's where the average sales price is right now.
It's, I wonder if we're going to be stuck in this channel. You all right there?
I need some water. Loose
you,
as
you need to hydrate before the call.
I really do. I need to just keep up and down. And now, get this, bad planning. I've just got a smidge left.
Yeah. You're the kind of guy who goes hiking with. You probably go hiking.
Take over the show, Pat.
You go hiking in Camelback with a 12-ounce bottle of water, I suppose, in the middle of the afternoon.
Yeah, that's right. That's right. $6.5 billion in finance debt. My guess they won't buy come October, and thereby dropping demand further. Got an interesting update for you on that, Lou. Hang in there real quick. It probably won't surprise you, but I also
breaking news
quarterly report. Looks like sales volume getting even worse when investors start to pull the foot on. Yeah, there's no doubt about that. There's no doubt sales are going to drop even further with investors out. But I've been showing a few homes in the 350,000 range. It's not that slow because there aren't that many left. Average sales price, because as far as new listings aren't heavily ended on the under 500 mark, more choices, more sales. Here's the news here, folks.
Is this break? I mean, you should have something flashing breaking news. I mean, let's keep people on the edge of their seat, Rick. Come on.
Yeah, I could have, well, let's just let's get started. That's
there we go.
As flashy as I got. Zillow and Open Door announce a multi-year partnership. Just when we thought they were going to go belly up, Pat, this comes out yesterday. Now, what's the advantage of that? So I went through and I read Open Door's quarterly report out of boredom, and
you get to sleep right away.
Yeah, it's got a few little nuggets in there, but one of the things that they said regards a long-term vision around exclusives. What can I say? Is that we know how broken the process is to buy a home, and it feels more like Craigslist and Amazon. And we're going to change that. We're going to make it simple, seamless experience. Don't hold your breath. And we really believe this is a win for customers and a win for Open Door. So here's what they're saying. They're going to offer homes exclusively on Open Door. You won't see them on the MLS. They're just going to be on Open Door. That's their plan. And it drives an audience to us in a way using our unique supply to aggregate direct buyer demand. And this can have a significant positive impact on economics. How? And they did talk about the loss that they just are going through right now, dumping their properties and everything. But the other thing is their solution is saying they're going to be increasing their margins in the last quarter. Now, what tools do they have in their toolbox to increase their margins?
Let's see. Fees,
yeah. Lower offers. Just like Carvana. Yeah. They made that. Actually, I like Carvana. I had a positive experience with them, but
it's like a real estate agency. I want to increase my margins. I want to go from 2% listing to 3% listing.
Now, Open Door's got a real advantage here if they partner with Zillow, because Zillow gets 200 million hits on their website a week. That means that Open Door is not going to have this really expensive advertising budget to drive people to their website because they're already going to Zillow. So they get to slash that budget like crazy. And so I see that advantage. I see Zillow having an advantage because they were no good at acquiring houses and selling houses. They stunk. So they're going to farm that off to Open Door and hope that the synergies between the two create something. But I don't really know where that's going. I just can't.
I mean, I don't know. I mean, my personal opinion is, if you're selling, I'm just going to say my gut feeling right there. And I hear and see this news. It's like, somebody's got a $600,000, $700,000, $900,000 property, $1 million property. It just, I don't know. My personal feeling is they're kind of making it Walmart-ish.
Yeah. Yeah. I don't think you're going to sit there with a $800,000 home and only put it on open door.
Yeah.
But the only thing that they offered was an appraisal guarantee. If you were buying a house from them, you'll get an appraisal guarantee. If it doesn't appraise, they'll close the gap. But speaking of
Speaking of
appraisals,
gaps.
yeah, what's going on in the market out there, Mr. Pat?
Yeah. Oh, you blaming me for all this stuff?
Well, I'm not going to take the blame.
Okay.
Hey, you didn't give me a shout out for my Rick Helps.
Yeah, nice Rick Helps t-shirt. Yeah.
Yeah,
I think
I'm telling you.
we got to do a drawing for one of those. Wow.
We should. We'll do that next week.
I mean, you can
Or,
always, is that like a rhetorical question? Rick Helps question mark or what?
Yeah, it is. It is. So rates, you said last week that it was going to be pretty bouncy, pretty volatile. And today we get
was bouncy.
Huge unexpected job claims or new jobs report. I mean,
yeah, I mean, we had they doubled
280. So
yeah, 280 went to 550, I think was the number. You know, it's kind of funny though. Is I you don't know this or not. I don't think a lot of people know this or not, but it's not. I mean, I think I said this several months ago. It obviously the government's smarter. You know, they got people that are behind all these numbers, but it's a survey. It's not like they're counting. They call a certain amount of businesses. So I mean, it's certainly not an exact number. Honestly, the more you think about it.
How many people did you hire last month?
Yeah, and it's not even, you think, with our technology, we'd be able to kind of get more scoped in, but it's just a survey of them calling. I don't know who the hell calls them. I mean, how many guys you got working there today? It's just, that's the government, they do it. But the rates, as I told you last week, I thought last Friday, I said that once we got past the Fed, we're going to be volatile. And sure enough as heck, I mean, Wednesday, no, it was let's see, Friday, Thursday, Tuesday and today. Tuesday was down, got beaten up. It was down like about 80, I think 80 some basis points. Today was down 78 basis points in terms of price. The 10-year treasury was up 15 basis points at 2.82. So we saw some, interesting moves here. I mean, like you said, we're kind of working in this channel, and we're like this day right here is a big day. Anytime you see obviously a big mark, that's a big day. The green is good, red is bad. And I'm going to pull this out a little bit farther, if you don't mind. I'm going to bore the living hell out of people here in the next minute or so, if you don't mind. But it's kind of interesting how I'm pulling this out a year. Let's see if I can pull it out 2 years. I'm kind of pulling the curtain back a little bit here on the, give me 1 second here. Look at the time frame that we've kind of been in. This is, January of 2021, kind of scooting along, 2021. And then basically the beginning of the year, this has just been a real volatile year. You see how choppy, these marks are? Yeah. It's been just a real choppy market. And I'm going to pull it in here. Let me see if I can pull it in a little further. Bear with me 1 second here. I'm trying to give people a sense of what rates are kind of here. They were just a slow, kind of smooth downward trend. And all of a sudden, like you said, right up, April, May, it's just actually really a whole year. It's just been,
and for the audience, that's an inverted trend. So down.
Yeah, this is the price. This is the price. Yeah, this is the inverted price. This is the price of the bonds. I mean, I know I do.
I'm going to get to your comment in just a couple minutes.
So, I'm just showing out how choppy the market's trying to find a level, and I just wanted to pull it out a little bit. But I think, the Fed meeting is next. The next Fed meeting is September 20th and 21st. I mean, we're talking what? We've got 6 weeks, 7 weeks, give or take, before we get a Fed talk. And I anticipate a lot of volatility, or at least some, if not to a lot, volatility till then. People are trying, you're going to have everybody trying to anticipate what their next move is going to be coming out before the meeting. And then that's where you see the choppiness. And when the numbers or the news comes out, then it actually kind of settles back down. So
we went to Daniel's question here. What's the 30-year rate on the national average? I saw us down at like 5.09 this morning, and this afternoon
Yeah,
was 5.45.
499.
So
499 to 551. I mean, it just depends. 5%. I looked at 5% down, 10% down. Basically, we're like at 4,995. You could probably get into 4.875 a little bit of cost, $1,000, $2,000. So, I mean, VA, I'm at about mid fours, 4 and 5/8. I mean, I saw one retail bank that was at 5 3/4 on VA, point higher, so there's, once again, I mean, it's, there's some varying degrees of pricing activity going on. In the market.
I want to talk in a minute about the conversation you and I were having yesterday about the cost of waiting and really analyzing whether you should wait or you should purchase there. But let me get to Sri here. Forgive me if I'm not pronouncing your name right, but home prices go back like 2017 or 18, or no way for that price in the future. That is kind of out of my wheelhouse in guessing, but just to give you a scope, this is where we're at now. And the red line and the green line are 2018-19 right here. So we'd have to go from here all the way down to here. And how likely is that? Probably not very likely, but we can see, how fast we blow through last year's numbers. Because this is pretty good run up here from 2019 flying up. So are we going to go down that fast? I don't know. There's going to be a period there to where if prices are being reduced, that they hit an attractive price point. And if the rates are even just hovering around where we are now, then the activity will pick up and the prices will start going back up. So I think that'll keep us from just falling to the floor. And we may end up with a more stable environment of 3 to 4% a year, which is the 50-year average. I don't have any idea what's going on in North Virginia housing market. I don't have access to that. If you want to find some information that lets you drill down a little bit, try redfin.com. They've got a research tab there where you can take a look. And but I only have access to the Arizona market. So yesterday, Pat, I had a conversation with somebody actually last night, and I like it when the YouTubers call me. I probably yak them, too much, but should I?
They never call me.
They did, yeah. I don't know why, and they call me after they've already got into a transaction. So call me before. You're kind of getting cold feet about whether or not he really, wanted to pull the trigger on a place he was buying, and I said, well, how much you paying for rent? He goes, well, $2,000 a month. I said, well, how, if you were to wait, how long do you think you'd wait? Well, maybe 3 years. Well, that's $72,000 that just went away. Right. So then you have to look and go, well, what if prices went down 20%? Okay. You still are paying down your note, and it's better than losing $72,000. But I think, and Daniel, yes, that is correct. It is lower than 2008 already. We're not saying it's time to buy, and we're not going to say it's, get out there just based on this math, but isn't that just another thing that you have to factor in your decision, Pat?
I believe so. I mean, that I think right now, I mean, like you said, I mean, the last week or two, I'm not, like you said, I mean, I had a gentleman call. I talked to a gentleman the other day, and he said, I think I'm buying this, should I, they want to know if they're making the right decision. And I kind of said, couple of things. I think this market's going to affording people to make a better decision, because there's nothing worse than, hey, you see this house, we can have an offer out in a half an hour.
Yeah. Yeah.
I mean, that you're talking about a $500, $600, $700, $800 million property, and you got to make a decision in 45 minutes or an hour. I mean, that's crap. I'm sorry. I mean, so that's number one. It's giving people time to actually think. Yes, things have slowed down, and yes, I think things are going to get a little cheaper. Who's going to know the bottom? We always see, you and I I coined the term and you jumped on my coattails with this one. As far as nobody ever rings a bell at the bottom. I know you like that one.
Well, that's because I have more videos than you do, so I get to use
Okay.
it all more. Get your own channel, Pat.
Yeah, I know. Okay, I will. I should. But I mean, if you find that house, you just got to be more. I mean, we've been through the ringer the last couple of years, obviously, but I was telling the gentleman, if you find a house, the house that he was looking at, if he likes it, it was $1 million. And I said, what is out there for 900,000 to $1 million? Is there anything like that? He goes, no. And I'm like, well, then you kind of, he probably kind of made he made his decision, hopefully, or helped him. I helped him. I mean, now you got time to compare. I mean, and if you got something you like and the bones are good and you feel good about it, and the houses, I always say when people walk into a house, I always tell first time home buyers this, you can walk into a house in the first 5 minutes. It sounds kind of spiritual or whatever, or weird, but the house will talk to you. I mean, you get the house, you can feel like, hey, I can see myself living in this house. And if you have to sell yourself on a house, I think it's not the right house. But so
I
this
used
time,
to tell first-time home buyers, I go, here's how I want you to look at this house. I want you to look at this house as if you just spent the entire day moving furniture, and you finally got that last piece of furniture in your house, and you sat down on your couch and you poured yourself a little glass of wine or a cup of tea and you sat down. Are you going to go, I feel really good about this? Or you're going to look around and go, what did we just do? So you have to feel that way about the house.
Yeah. Yeah.
And I think a lot of that was going away in this brisk market.
Well, that's exactly right. I mean, that didn't, you didn't have time.
You need to move, Danielle.
Was this, you're more,
House talks to me all the time.
But no, I think it's, like you said, I mean, not to get, and I think, will things soften up a little bit? I mean, but once again, we go back to the theory. I mean, everything I've seen the talk is just, things are just, they're the cherries come off a little bit, but, and I know people, we were talking about this and I'm jumping around a little bit, but as I always do, but, people want to make the right decision. I get it. But, I think it's more about making a good decision versus the exact perfect decision. Does that make sense?
Yeah. Yeah. You need to take the time to do the research because, when prices are going up and up, you're just going to buy and you got to get out and you're going to buy and you're going to hurry and you're going to buy. Now prices are going down and you got time to think, but it also gives you time to worry. So you got to make sure you're looking at all the math, and you're the only one that's have that answer as a buyer. And you got to go, well, how much am I paying in rent? I want to start building equity. Gee, when will I start to build equity? Maybe I'm going to lose equity for 2 years, and just really put a pencil to it and think about it. And look, there's a few YouTubers out there. If you'd have followed in the past 2 years, you'd have missed out on some amazing, amazing stuff. So
to go back to that guy that you said was as far as renting, like you said, I think, 3 years, $2,000 a month, you're looking at $24,000 a year. That's $48,000 over 2 years. I mean, and 2 years goes quick. That you can, I mean, it flies. That's 48,000. Everybody can run the numbers, see how much went to principal. Like you said, you're paying down principal. You keep renting at $2,000 or $2,300 a month. That's just money that's just going out the door. And the real estate game, the people that I found out over the last 22, 23 years, the ones that are successful. I got a buddy of mine that's bought investment properties, and I swear to God, he'll call me and he goes, hey, I'm thinking about buying an investment property. And I swear, I want to tell him, dude, slow down. We're at the, and he's just, the last 10, 15 years, he's been chipping away, and he's in the game. And if you're in the game, you're not going to realize, okay, because at least you just got to get in the game. I mean, and eventually this time frame, like you said, it's slowing back, allowing those people last 12 to 18 months that have been kind of beaten up. Get yourself, take a deep breath, put some new numbers to the paper. Maybe you can save up a little bit more money. Once again, 5% down is a good play. I had this gentleman that was talking about the other day. He's looking at putting $500,000 a down payment down. And I kind of said to him, I said, maybe one way to minimize your risk in the market, rather than buying $1 million home and putting $500,000 down, put $300,000 down. Don't put all your money, your cash into that house.
Yeah.
Take the $200,000 and buy, maybe a stock like Intel that's been beaten down at a 5-year low. That's just one way you could mitigate some of the, you kind of look at trying to offset the risk a little bit.
I want to jump to a comment here from the Click Spiffy, talking about July filings for these are rentals. These are, talking about eviction filings. A lot of this is pent up evictions. There was a rental moratorium for a long time, and the courts were backlogged for a year, and so they it just took a long time for that to come out of the system. There's always a certain percentage of evictions, but that certain percentage now got sucked into a little tiny funnel, and so we'll see what's happening. So and you have somebody on here just doesn't like you, Pat. So
you can't win them all.
Yeah, so
you can't win them all.
Like, Cat gives us a lot of golden nuggets. We're just two guys winging it here, but let's take a look at the inventory here for a second, because this is from last Saturday, and it's starting to not come up as quick as it was. But the interesting thing that I like to look at are the outlying areas that are now the balanced markets. And I'll show you here that if you look at Buckeye and you look at Maricopa and Queen Creek, and the reason those have so much more inventory is that's where the builders are putting their homes on the MLS. And look at the striking difference that you see there. That's why it's a more balanced market in those three cities. If you just look with everybody, you don't see that high of a spike. But boy, you get out those areas where they started building a lot of new homes, and you're gonna see a lot more homes coming out. This is a contract ratio chart. This thing's kind of busy, but it's showing you that we have a ratio of 45.1. Really, the only thing you can glean out of this is it's going down and going down severely. So what's the average price per square foot now is one of the questions. He's not a bad broker. Here's experience. He just doesn't rush buyers. Absolutely. Thanks, Lone Star. Yeah, Pat, if you call Pat today and you want to know what the rate is, and you want him to tell you that in 5 minutes, what are you going to tell him, Pat?
Yeah, give me a little bit of time. I got 50 different lenders.
Yeah.
I will put my skills against anybody in the last 22 years as far as watching rates. There's very few lenders that watch rates as much as I do.
Yeah, I think, and part of that watching the rates is not making a hasty decision.
Oh yeah, definitely.
I'm going to see if I can find an average price per square foot, but it's, when you're jumping around these charts, average sales price per square foot, I'm going to pick short term here, and let me see what it pulls up for us. Right now it says 297.03. It went down to 289 and it came up. It all depends on what was in the mix when that stuff was compiled. So I think, what we're seeing here is we're seeing sales plummet really fast. And we're seeing the number of listings that are coming out on a weekly basis start to slow down ever so slightly. Are we going to see that listing ceiling? I don't know. To where we just get to a certain number and then that's it. So, but we'll continue to watch what's coming out next week that we got to look for, because we don't have any Fed news coming, right?
No, it's just not that. I mean, there's probably some. Usually there's different data. I don't know. I don't have the schedule in front of me. But there's nothing earth shattering right that I know of on the schedule. Yeah. I usually pull up a schedule during the weekend to see what's coming up. So, but it's
you're getting ready for another trip. So
Yeah.
that's important.
Exactly.
All right. Well, Pat, thanks for jumping on. And if you want to build your own channel, I'm here to help you. And for the viewers, have a great Friday and have a fabulous weekend. Take care, everybody.
All right, buddy. Take care. Take care, everyone. Bye-bye.